We've had a number of questions in during for people when people have been registering. We'll try to address them as we go along, but if we're not able to, we'll try and respond after the event. The webinar is being recorded, and we plan on emailing it out to you all after the event has concluded. If you would like to submit questions during the event, we will endeavour to answer them. Use the Q&A buttons on your screen, and we will endeavour to get to them, but don't just wait till the end. If, however, after the event you think of something that you would rather have asked us, please just email into the registration address events@thomaswestcott.co.uk. We normally, as you would all know, we would normally have carried out a seminar yesterday. We had it booked for, but that didn't happen because of the circumstances that we're in. So we tried to still issue some information, and we have, as you will have probably had, we've been issuing blogs and video logs and tweets and so on all week, as it's Trustees Week, and we hope that they have been helpful. We intend to talk towards some of those, but not repeat it, because obviously you've got the articles. They're all on our website, thomaswestcott.co.uk. They're available in the Insights section of our website and in detail there. And the articles are written by different members of the team. So we'd be pleased to answer if we can at the relevant time. I just want to run through a couple of the ones that we're going to do it between myself and Cat Williams, who's my colleague, and who's also on screen, and we will be just elaborating a little on some of the points that have been raised as we've gone along. The first thing that we tried was a video log, and Simon Lake of our financial services team, who did speak at the seminar in 2019 at Exeter, was interested in trying to portray a fundraising idea that he'd come across, whereby you can register your charity with some of the internet auction sites such as eBay, etc., where if people you know are selling product of some sort on that site, they can register, you can be registered, and they can nominate, people can nominate you to receive a small amount of the proceeds or a donation, which can get paid straight to you, and it's a way of raising additional money. There should be a link on our website to Simon's video log, which he did. I think he was sat in his car when he did it. It looked like to me, but he went into a bit more detail there, and it's an idea that we've come across, and we thought we'd just try and pass it forward as another potential source of fundraising income. We know how difficult that is at the moment. Now, whilst we carry out our work in the accounting profession, independent examination, auditing side of charities, we realise that coronavirus has affected us all in a greater or lesser extent. And one of the things that we wanted to do was ask one of our charity clients if they would be prepared to answer some questions on what the effect has been on them. Now, one of the clients that both Kat and I work with is Exmoor Calvert Trust. It's a activity holiday venue for disabled people. and takes people from all over the country. Now, we asked Andrew Lamming, who's the financial officer at the charity, a number of questions, and he's put them forward, his answers and his comments and his thoughts about how COVID has affected his charity and what it's done. And I think you'll see that it's quite dramatic. They're a charity that was generating about 1.2 million pounds a year, with people coming in, staying and carrying out the various activities, some on water, some with animals, some in the swimming pool, and climbing and all sorts of things on the edge of Exmoor. Come March, they just shut, so they've had no income. And it's interesting and quite concerning about the effect and the stress levels that they've had to go through to try to keep their charity alive. And as he says at one point in his answers, they are in survival mode. Their hope is to survive through to next spring. Obviously, this was written 2 or 3 weeks ago, prior to the latest lockdown, prior to the latest change with regards to furlough. And that will have had another effect. I just thought it was interesting to see from their perspective what they've done. They furloughed virtually all their staff. They've applied for emergency help from the furlough scheme, the CBILS, the Coronavirus Business Interruption Loan Scheme. They've gone for funding from other charities and more national networks, and have managed to get something like 700,000, some of which is in loans, towards their £1 million that they need. And they're hoping that they will be able to trade. They have managed to open on a partial level from August, and obviously now they're closed again. It's quite disconcerting how it's affecting the charity sector as well as all sorts of other businesses. And I'd be interested to see if there are any comments that people have with regards to what they think the sources of help are for charities. It's very difficult, I think, for charities to survive. Somebody's just asked a question about furloughing, and one of the questions and one of the things that Calvert Trust did was furlough their staff. Somebody's just asked, can new employees be put on furlough under the extended JRS scheme who have not previously been furloughed? The answer is yes, they can be put on furlough, but they needed to be on an RTI return, payroll return to HMRC by the 30th of October. So they needed to be on a payroll return by the 30th of October. If they were on that, they can be furloughed. They don't have to have been furloughed previously. I'm going to stop at that point and give Kat an opportunity to talk about a couple of her articles that she's covering. Over to you, Kat.
Thank you. First thing I want to cover, in some ways probably people are sick of us talking about COVID, but it's still going on. Over the last few weeks, everything just seems to have changed on a daily basis. And if we'd done this webinar this time last week, this section would have been slightly different to what I'm about to say now. Steve's just covered a little tiny bit of it just in his introduction, but the furlough scheme that was supposed to have gone as of the end of October has been brought back to life. At the moment, it's believed that 80% of wages will be covered under the furlough scheme, but employers' national insurance and employers' pension contributions will still be required to be covered by employers, as was during, I can't remember if it was July or August, during one of the stages. Government has said they might revisit this in January 2021, depending on how everything's going. As Steve just mentioned, the qualifying date for being on the furlough scheme has changed, and it's last Friday as opposed to it was previously a date in March, which does enable additional employees who've been employed in the last 6 months to be put on the furlough scheme. The one potentially downside from the extension of the furlough scheme is the job retention bonus, which was previously expected to provide £1,000 per employee who'd previously been on the furlough scheme but was still employed towards the start of next year. That has currently been scrapped. Government has stated that there may be an appropriate incentive at an appropriate time in the future. So this may or may not have gone for good. I'm not too sure. This might have a cash impact for those charities that were incorporated into their budgets, X amount of £1,000 towards the start of next year. That's not looking likely. However, there is the furlough scheme if you need it. There's also cash grants available for businesses that have been required to close. This is up to a maximum of £3,000 a month. This would be expected to cover the likes of a charity shop that the government's required to shut in the current lockdown. However, they haven't actually announced any more details as to how you do anything about claiming that as yet. Local authorities have also been given additional money for discretionary grants. As with the previous funds, it will be up to the local authorities as to what they do with this. The previous round did favour charities, so that might be positive. Finally, bounce back loans and CBILS loans are still available. Bounce back loans have been extended until 31st of January next year. So if you didn't need one in the first place, but now your charity is starting to struggle and you think this may be something that would help, that is still available. A lot of what I said is just the skeletons, because actually the details haven't been announced yet. Supposedly they are going to announce everything on Tuesday. I believe that we are doing a webinar, the COVID team, on Wednesday. So if furlough is anything that you would like the in-depth details of how you calculate it, which I don't think has been announced as yet, might be worth signing up for that. That is broadly, in a couple of minutes, the current reliefs available, specifically for charities. So that wasn't what was on the website, but we just thought with everything going on at the moment, it's quite important just to highlight that to everyone. Moving on to Tom's article that was published earlier in the week, just on holding meetings virtually, which moves on to a couple of other points and does answer a question that's come in as well. The powers enabling charitable companies and CIOs to hold their meetings virtually, which could mean phone, video, or other electronic means such as Zoom, that has been extended to the 30th of December. However, the previous extension allowing the delay of AGMs to the 30th of September 2020 has not been extended. This just means if you need to delay your AGM for any reason, you need to document this properly, make sure it's included in your minutes as to why you've had to do this. However you are holding your meeting, it is important that you still document it to the appropriate standard. I know sometimes it's hard depending on how you're holding your meeting. If it's by email, you end up with emails pinging left, right and centre. Someone does need to collate the decisions made, make sure that everyone is happy with them. And even if it's a case of you still have your formal minute writer, they collate all the information, make sure they get everyone's opinions. Depending on how you're holding your meetings, it can be slightly trickier for everyone to be heard. So Zoom's generally okay, but it depends on how it's been held. And just make sure all trustees are aware and they're happy with the decisions that have been made, and they just have had their opportunity. Because at the moment it feels like we're in this forever, but we won't be, and we just need to remember why we made the decisions we did. And for 3 or 4 years down the line, when the trustee board may have changed, just make sure it's documented. Going slightly on to another point in Tom's articles, filing of accounts. Charity Commission have been very generous with extending filing deadlines. If you are struggling to get your accounts submitted on what would normally be called on time within 10 months of your year end, then if you just send them an email, they are pretty good at extending the deadline. They have said wherever possible, accounts should be filed on time, but where this isn't possible, they're pretty flexible. I've personally emailed them a few times and had a response pretty much straight back, just saying that's fine and we'll be in touch in due course. Strangely, they don't give you a new deadline, which I found a bit strange, but they've just said they will be in touch at a point when it's convenient, and I've not heard back that it's a convenient time as yet. If you're a charitable company, you do also get a 3-month extension that's automatically applied, and that's if your accounts are due to be filed before the 5th of April next year. Finally, just moving on, there was a question that's come in as well about trustees' reports and whether they can be amended. Hopefully this next section will just cover that as well, especially if you are having issues approving your accounts. It might be that you need to put slightly more information in your trustees' report. They need to be an accurate representation of the charity's performance, and it will include the success, which hopefully there'll be a lot of them, but also the challenges facing the charity. And the challenges facing the charity will have changed since the year end. The impact of COVID, I think, has been a challenge for everyone pretty much. So I would personally expect to see in every trustees report that I read an explanation as to how they've coped during the pandemic and what safeguards and changes they've had to put in place and what the impact is for the longer term of the charity. And this to me shows good governance. Just had a question come in about filing accounts. I'm just going to read that at the same time. Yes, for some reason, they do show as unknown. It's because so they don't show as late. I'm not quite sure. When you go past your filing deadline, it just shows it as unknown. Charity Commission have just said it's just because they can't flag it as anything else. I'm hoping that gets changed in the near future. In terms of, there was another question that just came in about whether you can resubmit your accounts if you have made an error of content or procedures in your trustees annual report. There's a button on the Charity Commission where you can resubmit your accounts. You just go in as if you're going to submit them the first time and you just click on resubmit. So yes, you could do that through there if you believe that the information you approved the first time wasn't correct. I am going to hand back to you now, Steve, if that's okay. I think you're going to run through a few more bits.
Okay, thank you, Kat. I think one of the things that I've been asked relating to virtual meetings and is just, it's the same point that Kat's been making, but it's documenting what you do and how you do it and why you do it. And the big thing really is if there are any votes that trustees have to make, and making sure that that's documented accordingly so that decisions are recorded as being made appropriately and that people have the opportunity to vote for and against. It's just good governance, and that's what Kat's been saying there. One of the other articles I'm going to just talk about, and we've been asked a question about as well, is charity reserves and quantifying them and reporting on them. It's Ian Huggett, one of our colleagues, has written an article on this, and we've recently, it's something that we come across quite often, in particular, I guess, with new charities to ourselves, in that we often are talk to them about how you show what your reserves are and how they can possibly be reset out to make it easier for readers of the accounts to understand why your charity has those particular levels of reserves. As you probably all know, there are unrestricted reserves, there are designated reserves, which are part of the unrestricted group. There are restricted reserves and there are endowment reserves. Endowment reserves are a permanent fund. Restricted reserves are funds which are raised for a particular purpose. Unrestricted reserves are the funds of the charity for its main purpose. And designated funds are unrestricted reserves that the trustees have allocated, if you like. That might be an easier way of putting it, rather than calling them designated funds. One thing that we do get asked quite often is at what level of reserves should a charity have? That is a question we've had sent in. It is not particularly easy to say that all charities should have a particular level of reserves. It depends, I suppose, the answer. It is not a charitable activity to just collect money and build up reserves, but it is part of the governance of your charity to make sure that you have sufficient reserves to take account of potential changes in circumstances which might be happening. Now, with unrestricted reserves, what is generally talked about as the reserves for a charity, the level of reserves for a charity to have going forward, is sometimes known as the free reserves figure. And that would take into account the unrestricted reserves of the charity, probably less any fixed assets which the charity might have on its balance sheet. So if it's got a property, that's not likely to be classed as a free reserve because it's quite difficult to realise it. Potentially sometimes investments, it will depend on what those investments are in. And also potentially other designated reserves. So if there's been money put aside by the trustees for a particular purpose, say that they're saving towards a new piece of equipment, but they're doing it out of their reserves rather than raising money specifically for it, then that might be something that would be taken into consideration. And therefore, the total unrestricted reserves that the charity has, you would take off the fixed assets, maybe the investments, maybe the designated fund, and say, right, that's the free reserves that this charity has got. In other words, it's usually like the bank balances after current expenditure is paid, if there are any creditors or if there's any money owed to the charity for some reason, that's taken into account. It's frequently that sort of figure. Now, how much, what extent does a charity need its reserves for? Well, I think it depends on what that particular charity's purpose is. Different charities will have different requirements. If for example, if you're running a care home, you would feel you would need sufficient reserves so that if you had to shut the care home, you would be able to do it in an orderly manner and enable the beneficiaries, presumably the residents, but also the staff, and also be able to deal with any implications for property or stuff like that. And therefore you might need a significant level of free reserves to be able to manage the closure of the organisation. It would be different if you're a charity which is some form of club or association which has no employees. They might not need anywhere near the extent of those reserves because they've got less commitments. So it's quite difficult to say a charity should have X amount of reserves. It is often referred to in terms of looking at the annual expenditure of the charity, seeing what the charity's annual expenditure is and saying, well, it's likely to take us 3 months or 6 months or 9 months or maybe even 12 months to wind this charity down in an orderly manner. The problem with that sometimes is that events as now can supersede. And you might find that there is a gradual drain on the reserves before you realise that you've got to make that decision to, in an orderly manner, close the charity down. That's what you're normally looking for. The reserves are for having dealing with the unexpected. Now, I mentioned some designated funds. We have some clients who, for their own reasons, have decided to have a designated reserve for potential redundancy payments that they might have to make in the event of having to close down. They've put that money on one side. Fine. It's a decision that they have made. And the thing with the reserves is that your policies are set by the trustees. They are explained in your trustees' annual report, and then they're implemented, and it gives you the target that you can get to. And in the note in the accounts that explains how the reserves are, what they're for, and the levels of them is established usually towards the end of the notes in the accounts. And readers of the accounts, and in particular, if you're applying for funding for fundraising to help support your charity, if it's clear in the accounts that you've got reserves, but the reasons you've only got a month's reserves and you're aiming for 6 months reserves, and that's why you want additional funding, that's what's important in your narrative, in the trustees' annual report, and in the policies that you've established, and why you feel that is the right thing to do. So there's a couple of examples in the article that Ian wrote, but it is becoming, and I think with the current circumstances, it's quite apparent that charities need to have significant reserves. And it's all very well saying, well, we had all these investments, but we all know that when a charity whose year end was 31st December, their investment portfolio might have been valued at one figure. If that same portfolio was valued at another charity's year end of the 31st of March, it would have been 15 to 20% lower because of what had happened to the markets. Now that's maybe come back to a certain extent, but if you suddenly say, well, we've got these investments on one side to support us, and the markets take a dive at the time you need it, is it the right thing to do to cash those investments in when you have a dip in the market because of what's happening in the world? Very difficult to come up with that. No right or wrong answer. But again, the governance comes down to the trustees having considered it and made their decision, having set their policy, and then trying to implement it. think that's enough on reserves for now. A further article at this time that one of our colleagues, Adam Croney, wrote was to do with financial stability, and he was talking about, in the circumstances that we're in, managing the finances of your charity and what is the best thing to do. And of course, I guess like any or a number of other businesses during coronavirus, there are some who've done well and been really successful. There are some who've really struggled, and that applies a little bit across the charity sector. If your charity is really reliant on income from shops that you have through a trading subsidiary, perhaps, then that's likely to have been affected badly, because the shops maybe have been shut for most of the time, and the income's not been there, and the footfall in the high streets has not been there. On the other hand, if you're a charity that is getting support from the government and the local authorities because you're working with sectors of the community that are in need of help, and there have been grants and financial support available, might well have pushed your charity forward and promoted it. Whichever of those options has happened, you still need to be acutely aware of where your finances are, and have you got enough to deal with the issues that are arising. And one of the methods, Adam in his article has put 8 points down for suggestions as to where you might go, and amongst those obviously is control is the main thing. Control of your expenditure, your cash flow and your forecasting. Are you in a position to be able to manage that properly? Can you look at your expenditure? Do you need to control that? Pull in the horns. Is the expenditure approved by the appropriate people? And has the expenditure been authorised? And has there been communication from the trustees to the relevant people to say, actually, we're not doing that now, we can't afford it, we're pulling in the horns and you're going to have to stop that? And has that communication channel been kept open so that the people who potentially might be ordering commodities for the charity know that actually we're not going to have those now, we can't afford it? Are the possibilities of applying for additional funding, grants or loans, or how might that be available? There are charities out there which are for basically just provide grants for other charities. One of the things that I would say that you need to bear in mind, and the Charity Commission have written updates during the COVID pandemic, is if you are finding that your charity is in serious trouble, one of the things that trustees have an obligation on is to report, excuse me, to report to the Charity Commission that there might be a material or serious incident. Now, normally this has been based on a figure of £25,000 reduction in income, or 20% of your income being reduced. They have issued publications saying that during the pandemic, those criteria are not to be used particularly, but what is to be used is the judgment of the trustees on what the effect of the pandemic is on your charity. Are you going to survive? Are you going to be able to come through it? If not, should you be reporting that as a likely matter, a significant effect on the charity? Is it a serious incident that is worthy of reporting, even though you've not made the decision at that point that your charity needs to merge or or fold, and is a merger an appropriate thing to take into consideration. There is a lot of guidance on the Charity Commission website. Sometimes it's not easy to find. Sometimes you've got to hunt around, but they have been putting stuff out there for trying to help trustees with their responsibilities during the crisis. I think, Kat, I'm going to stop there and let you speak on a couple of things.
Okay, thank you. Just moving on from the last couple of comments that Steve made, one of the things that some charities do look at, not just because they're in financial difficulty, but a lot of charities are set up because one of the trustees, generally the founding trustee, has had some kind of event that's significantly impacted on their life. And there can become a time when the trustees, or the founding trustee generally, decides that actually the charity isn't something that they want to continue putting all their time into. They've achieved what they feel they can achieve from the charity, and it's time for someone else to take over. Some charities will have the board structure just for the trustees to carry on without the founding trustee. However, some won't have that makeup, and some, the trustees will just decide they don't want to do it without them. Keith's article, which is what I'm just going to talk through, does go through this in a lot more detail, but I was just going to briefly run through the steps that you'd go through for a merger, and then a couple of questions that came in which actually quite nicely explain the point. So in terms of how you go through a merger, first point is, what do the trustees want? What do they want to happen going forward? And then identify a list of charities that meet this criteria. The main thing that you'll be looking at is the objects. Obviously, it's unlikely you will find a charity with exactly the same objects as yours, because every charity is unique. But generally, you can find some with some similarities, or that you look at and think, yeah, no, that would be a good charity to merge with. Then would recommend using a third party just to get in touch and sound out whether that would be something they're interested in without revealing any names. And then with the use of non-disclosure agreements, just take it forward from there. And then get to know the potential charities. Obviously, if you've put all this work into the charity, you just want to know going forward that it's going to be well looked after and continue the good work that you've put in. And then finally, just tick the boxes, proceed with the merger, and then you will have to get Charity Commission approval. But generally, they're pretty helpful on that. Not on other things sometimes, but they are pretty good with that. I mentioned that we had a couple of questions. The first one related to I think it's a two-part question, but the first part related to the availability of guideline materials for trustees to follow and pre-merger due diligence. Charity Commission have published guidance which is titled Making Mergers Work, Helping You Succeed, along with a checklist to go through the process. Within the documents, there is a due diligence checklist. I mean, it is quite long. It does cover every single eventuality under the sun, pretty much. And it would need to be tailored for your individual charities. Obviously, due diligence would need to be proportionate to the charities that are taking place. So not all the points will be relevant for every single charity. However, we'd expect as a minimum, it would include reviewing the financial position of the charity, whether they've got any employees, commitments, where their funding comes from, and how long their funding is committed. If they are reliant on grants and they've got a 3-year grant that comes to the end next year, might be slightly different to someone that's less reliant on individual grants. Would also recommend, not just because we're a firm of accountants, but we'd recommend that you got some professional advice, whether that is on the finance side or on the legal side, there are quite a lot of solicitors that specialise in charity accounts. The second part related to preparing revised governance documents for the merged charity once you get through the whole procedure. If you're using the standard Charity Commission articles, there shouldn't be too much problem with updating the articles. One point just to look at is the objects of the charity. It's quite easy to say charity A does this, charity B does this. Let's just put them together and we'll combine their articles. And their objects will be whatever they were doing before. With the additional resources of both charities, it may be that actually there's something else that you can do within the same area that increases the beneficiaries that you can support, help in a different way whilst still remaining true to the core of the charity. And it's a lot easier to change your articles once and your objects rather than do it once, realise that you haven't actually covered what you want to do in the future. So definitely worth sitting down at the beginning, trustees looking at a long-term approach to the charity, where they'd like to be in 5-10 years, and then getting the articles and the objects in a slightly broader approach, just so it can cover everything that you may wish to continue doing in the future. One other question that just came in on mergers is whether we're seeing an increase in mergers. We are seeing some, not that many. From my personal conversations with people over the last few months, I think lockdown has changed. I think it's given a lot of people a chance to stop and think about what they actually want from life. Not just in the charity world, just life in general. And I think there may well be more mergers coming through in the near future. I think a lot of this year has just been getting through. That was all I was going to mention on mergers. I was just briefly going to mention a few bits on safeguarding, which was an article that was written by me. It only went out this morning, so it was the last one to go. I'd save the best till last, I don't know. We have covered safeguarding a few times recently. However, I don't think safeguarding can be overemphasised. It's the trustees that are responsible for the safeguarding. End of the day, buck stops with the trustees. You can delegate the responsibility, but it's the same as everything. It stops with the trustees. The article on the website does go through 10 points. I'm not going to go running through 10 points. So I was just going to briefly run through a few of them. Mainly, just make sure your charity knows the risks and how they should be managed. These probably have needed to be updated in the last week as we've gone into lockdown. You probably need a new version for 4 weeks' time, but when we go back into tier 1, 2 and 3. And if you're operating in Scotland and Wales, you probably need a whole new list. So there are also specific rules if you're working with children or at-risk adults. Once you've identified your risks, make sure you've got your policies in place, make sure these are updated, make sure everyone knows what they are, where they are, how to follow them. And if someone does raise a concern, which everyone hopes doesn't happen, but it does happen from time to time, just make sure you know what to then do. We would also just recommend that trustees review whether they benefit from some kind of safeguard training. There's plenty of it. I think you can do most of it online. So even at the moment, there's no excuse, you can just do an online Zoom course. Make sure it's discussed at your trustee meetings. Sometimes it's not the most exciting thing to discuss, but it is really important. So if you've got a standing point on your minutes and you just review it, and hopefully 90% of the time it will be safeguarding no issues next. But at least it makes you think about it and you can document that you've thought about it. finally, just depending on what sector your charity works in, may or may not be as relevant. Sometimes it's really helpful to get someone external just to come in and look at what you're doing, just a fresh pair of eyes, especially if you're in a high risk charity, working with children, at-risk adults. Then sometimes A, it looks good, it shows good governance, but B, it can be really, really helpful. So just to finish off before I pass back to Steve, every charity is different. What works for one charity will work for a different charity, or it won't work for a different charity. So it is just a case of documenting it and making sure you understand what you need to do. Back over to you, Steve.
Thank you, Kat, and thank you for your content. I've just got a couple of final points to make. I don't know if any of you have, I suspect you have, but I had an email today. Yesterday, Charity Commission published another their latest newsletter. So that's available and worth having a look at, just to update you on things. They also have published earlier this week some updates on revised charity trustee guidance based on publication CC3, and there's in particular 5 sections which worth having a look at. The charity's purposes and rules is one of the things for trustees, and it's basically, saying make sure that you read your charity governing document. There is a tendency for us all during the course of a number of years for the charity's direction to change slightly for some reason or another as matters change in society. But has your governing document changed accordingly, and does it need to be updated so that you're acting still within your appropriate purposes? Trustees making decisions at a charity, and again it's emphasising things like act within your powers as trustees as set out in the governing document, act within the object of your charity, act honestly, manage the conflicts that potentially you might have within the governing body and the trustee board, and make sure that you deal with them appropriately. There's quite a fair bit on that. Managing the charity's finances. I've always said, if you can't remember anything else, there's 2 things to being a trustee. Your role is, 1, safeguard the assets of your charity, and 2, make sure that the funds that the charity has are spent on the purposes for which that charity is established. If you do those 2 things alongside the likes of acting honestly and recording what you say, etc., you won't be going far wrong. But managing charity finances, there's a publication on that. There's a publication specifically on managing conflicts of interest in a charity, in particular financial ones, but not necessarily exclusively. Some to do with loyalty, some to do with whether colleagues or family members should do work for the charity, on the decision making, whether a trustee should be involved in that process, and recording what was decided and who decided it, so that if there is a trustee who potentially has a conflict, that it's recorded that they have been excluded from that decision-making process. And there's a further document in respect of sending information to the Charity Commission and the support that the Charity Commission are providing. So there is a fair bit of advice on the pandemic from the Charity Commission, some as recent as this week or yesterday even. So it's worth having a look on their website and spending a few minutes trying to look around and find that advice. I just wish to mention that, not specifically to do with charities, but we have a webinar on Wednesday next week at 2:00, basically on the furlough scheme and support from the government during the pandemic, the latest furlough scheme and the latest support. If you wish to register for that, it's events at Thomas Westcott, or go through the website. And also all the articles that Kat and I have been talking about are on the website, and they are under the insights section. Jamie will be sending out a link to the recording of this event if you want it, but also a link to the insights page. You can click on there, and the articles that we are talking about relating to charities and the effect of COVID on us. I like to finally wrap up, to say thank you to Kat for your contribution to this event. B, thank you to our other colleagues who've written some of these articles for the work that they've put in, and also to Andrew Lamming for answering and helping us with the experience that Exmoor Calvert Trust has had relating to the effect of COVID on their charity. I wish you all the best. If any of you do have questions that we haven't covered, please email them in and we will try to answer them. I thank you for joining us. I'm sorry that we haven't been able to do our normal charity seminar this year, but who knows, hopefully next year. Thank you for joining us, and stay safe in these difficult times. Thank you.